Welcome to Her Money Revolution. I'm your host, Angela Brooks, your guide on this journey to becoming a wealthy woman. As a certified financial planner, owner, and advisor at Family Capital Management, I'm on a mission to simplify the conversation around investing and to help women generate more wealth by making their money work for them. Join me as we navigate powerful financial planning strategies to help you achieve your personal and professional goals. This podcast is your go-to destination for no fluff, easy to implement financial and investing advice. If you are ready to achieve audacious financial goals, dream beyond boundaries, and generate massive wealth for you and your family, this podcast is for you. Grab a notebook. Let's get started. Hello and welcome back to Her Money Revolution, the podcast where we empower women to grow their wealth by making their money work for them. I'm your host, Angela Brooks, and today we are continuing our Investing Toolkit series with a critical metric that reveals a company's true financial wealth. Can anybody guess? It's free cash flow. If earnings are the headline number, then free cash flow is the fine print, the real story behind a company's profitability. Today, I'm going to explain what free cash flow is, why it's important, and how you can use it to spot strong investments. You know, companies just show you certain things that they want you to know. So understanding how free cash flow works is really going to give you the full story. If you're ready, I'm ready. Let's dive in. So what is free cash flow, or FCF? Well, it is the cash a company generates from its operations after paying for capital expenses. Things like buildings, equipment, technology upgrades. It's the money that's left over. It's the money left over to pay dividends, to buy back shares, possibly to reduce debt, or even reinvest in the business. The formula for free cash flow is pretty simple. Free cash flow equals cash from operations minus capital expenditures. So let me give you an example. If you're taking notes, if a company generates $10 million in cash from its operations, and then it spends $2 million in equipment and facilities, the free cash flow is going to be $8 million, right? 10 minus 8, basic math. So why is free cash flow so important? Well, it's a signal of financial strength. A company with strong free cash flow has the flexibility to grow. It has the flexibility to reward investors, to survive economic downturns when we are in them. Second, free cash flow often tells you more than the earnings because earnings can be manipulated through accounting tricks. Yes, I did say that. There are accounting tricks that make a company look better than they really are, but cash flow is harder to fake. Thirdly, consistent free cash flow is a sign that a company's business model is working and continuing to generate real value. That is a company that I would want to buy. So let's break it down. How can you use free cash flow in your investment strategy? First, compare free cash flow to net income. If a company's free cash flow is consistently higher than its net income, it's a sign of strong quality. Second, look at the free cash flow yield. This is calculated by dividing free cash flow per share by the stock price. It's a great way to measure how efficiently a company turns its cash into shareholder value. And thirdly, check how the company uses its free cash flow. Is it reinvesting for growth? Is it paying investors dividends? Or is it reducing debt that the company may have? Healthy cash flow should support shareholder returns, right? So when you go meet with your financial advisor and you're like, yeah, Amazon's up 28%. That's great, right? What are they doing with their free cash flow? Well, they're reinvesting that back into the company. That supports your shareholder return. Let's walk through another example. Suppose that you're analyzing two companies, okay? Company A reports $5 million in net income, but only $1 million in free cash flow. This gap could signal issues like rising expenses or heavy capital costs, possibly. Okay, so company B reports $5 million in net income. So it's $2 million less than company A, but it reports $3.5 million in free cash flow. Despite the lower earnings, company B is most likely going to be a better investment because it's generating more real cash flow from its operations. I work with clients and we look at their balance sheet and all of your assets, all of the liabilities. So assets minus liabilities equals your net worth. And oftentimes you might have a lot of net worth, but the real story is when you dive into the actual cash flow, right? Like you may have a large net worth, but your cash flow is tight. Maybe you're month to month, right? That's not a healthy life. That's not living abundantly. That's paycheck to paycheck. However, free cash flow, it's not just a magic number. None of these are. No metric, nothing that you look at with any of these stock prices is going to be like, oh, that's the magic information. That's the key data point to pay attention to. So free cash flow is not that, okay? We want to be cautious. If you see negative free cash flow, sometimes it's a sign of trouble, but maybe not. It could also mean that the company is investing heavily for growth, right? The key is to understand why, to understand what is really going on in the company. So how should you use free cash flow in your investment approach? Great question. Glad that you asked. Well, first, use it to filter for financially healthy companies. Companies with strong free cash flow can fund growth without relying on debt. Second, compare free cash flow to dividends. Sustainable dividends are always backed by a solid cash flow. Third, track free cash flow trends over time. Don't just look at a point in time. Track it over time. Consistent growth in free cash flow is a powerful signal of a strong business. Okay, so to sum it up, free cash flow is the lifeblood of a company. It shows you where the money is going and whether the company is truly profitable. It's one of the best tools that I love to use and one of the best tools that you can use to evaluate a company's long-term potential. That's all I had for today's episode of Her Money Revolution. If you found this helpful, share it with a friend, subscribe so you never miss an episode. Knowing how to read free cash flow can help you invest with confidence and clarity. And that is my goal of this podcast, is that you have confidence and clarity around money. Until next time, believe in the power to build wealth and bless others. I will see you later. Thank you for joining me today, and I hope you are feeling more empowered in your financial journey. Remember, follow and subscribe to Her Money Revolution on your favorite podcast platform, and share your feedback by leaving a review. I'd love to hear your biggest takeaway from today's episode. Until next time, stay inspired.